Hello, everybody, and welcome to the Open Equine Market Commentary for the week of September 30th. My name is Toby Gennaro from Trade with Precision, and just coming to you with the outlook for the markets this week. So let's get to the charts here and see what's going to be happening for the upcoming week. And I'd like to start off with the monthly chart here and just take a look. We have the September candle right here that's going to be closing out on the last day of the month here, September 30th, Monday. And so really interested to see what this candle is going to look like. Right now it's looking even though it's green, it's looking fairly bearish. Prices were rejected off of that 1726 level, which was that Fed announcement and about quantitative easing. And so really looking to see if we're going to actually break below. Doubt it'll happen on the September candle, but to break the low of the previous month would be to get below that 625 level. And if we can break the low of that, this might be the opportunity. If we get a nice bearish candle in here for the month of September, this might be the opportunity. We're looking for that final pullback on the monthly chart back into the moving averages, because we haven't had that for basically almost the last year since what, November, the end of November 2012. So that's going to be a pretty important candle for the closeout. Want to be watching that pretty closely over the next 24 hours here. And then looking at the weekly chart, you can see we had a nice rejection candle there. We had a reversal pattern setting up there, basically just broke through to a new high, rejected that high, and then we have now broken the low of that candle and then have since come down. So it's looked like we're pretty much pulling back either into the moving averages on the weekly chart, or we could be pulling back to this level right here. Let me get a line in for you on that, but we could be pulling back to this level right around here, which would really be the swing low right around that 1622 level. So it just really depends. This is going to be a news-filled week. I mean, we have Tuesday is going to be some kind of announcement, most likely, or at least in the early part of the week, as to what's going to be happening with the U.S. government shutdown, the debt ceiling negotiations, and all that stuff that's going on. So it's going to be kind of a cautious week for trading. Currently, right now, on the monthly chart, we do have a 50% Fibonacci retracement. And I'll show you where that's setting up right about here. We just draw on that Fibonacci retracement from the swing low up to the most recent swing high, and that puts that level right in there, right around that 1672 level, somewhere in and around there. And then we have that 1670 level, which is historical price support and resistance in there as well. So we have a couple things there working. Probably more than likely we'll see a bounce off of this 1670 level, and then potentially moving back in. We should have a gap in the morning, more than likely, up at that level where we just got that breakdown off of. And we can take a look at that on, well, we could probably take a look at it here on, let me blow this up so we can see it a little bit better. So we had this close right here, and we're looking at the close of right around 1686.50. So that's going to be the gap, more than likely, if the gap still exists in the morning. That could close overnight in the European session, but more than likely the market's in a pretty strong downtrend here. We should see a pretty reasonable bounce at the 50% level, potentially back up into that 1686 level. There's also a level right in here around 1685, which is pretty close, so it wouldn't be unreasonable to get back up there and fill that gap just on a bounce off of this 1670 level. That would be reasonable. Retest that level, and then potentially even get another retest of this 1670 level, if not pull back even further until we get back at least into the moving averages on the weekly chart. So that's kind of what things are looking like on the S&P. If we go down to some of the lower time frames, see if we see anything different here. You can see that level coming into play right around there at 16, right around that 1672 level. And as you would expect, obviously you can see that that opening gap, if that still exists in the morning, we might get a bounce right back up into that level. You're going to see some resistance and selling pressure coming in right around there, but to sneak by that and get up to fill that gap wouldn't be unreasonable to look for that in the morning. So overall, looks like the markets are pulling back. Don't know if we're going to get a pullback on the monthly chart, which means this could be maybe a 2 or a 3 month downtrend in the market. We won't know that until we get the closeout of this candle. The candle's looking like a nice rejection candle off there. Then we won't know also until we get the break of the previous month's low. to see if we're actually going to get that pullback. So a couple things to look out for there in the coming week, and we'll just have to see what the news is going to be and how the markets react fundamentally to see if we can get some moves on the chart technically. And moving over to the small cap stocks with the Russell contract, not a whole lot of new information here on the monthly chart. Still have a very bullish candle there for the month of September. Once again, one more day to get a closeout on that candle. We're still at a new high. So if we get a close above the previous high, that would be certainly a bullish indication. But going over just to temper that bullishness of the monthly chart, again, we've had a long run up there, so we're still looking for that pullback somewhere here in the near term, but there hasn't been anything in sight that's telling us that's going to happen. But right here, as we look on the weekly chart, we see we have a nice indecisive candle here closing out for last week, really just expressing the indecision of traders and investors around the globe looking at some of the news that's been coming out related to, the different things about the U.S. government, debt ceilings, Middle East, and all those things. With this kind of a headline-driven market here. And if we go back and just look historically on this same chart, we can see some of these smallish candles up at the top of these multi-week runs. Some of them are indecisive candles, some are bearish candles, but these smallish type candles have always been a precursor to these larger pullbacks over 1 to 2 months, getting a pullback deep into the moving average zone between that 10-20 period moving average, and very consistently pulling all the way back down into the 20 period zone. So looking at this right here, that makes me very cautious. We're pretty close to getting a break of the low of that candle. We don't have it yet, and there's actually a little bit of a support level in right there around 1058, 1059 or so. So I'd be anticipating a little deeper pullback here, even though on some of these other charts I have a Fibonacci retracement drawn in here from one of the previous swing lows to the most recent swing high. So we do have a what looks to be about a 50% retracement on that. So there is a little bit of a cluster there with some support and some different levels. But on this top level right up here at 1080, let me get a line in there so you can see that a little better. So we have a line in there right at 1080, basically a flat level that starts right about here and puts us in on, oops, let me redo that a little bit. The high there is at 1079.80. Then the next candle that does a retest is right at 1080.20, so basically another higher high. And then we come in with the third touch, which is right around 1080. So pretty close there, a good flat level, but as we know from the flat level breaks, we have divergence on the indicators, which really nullifies any type of a flat level breakout for us here. As you can see with the higher high touches up along here, we actually have the indicators converging to the downside, which basically gave us another rejection candle here, which is very significant. And basically we got the breakdown off of that. And so we might get a bounce off of this 50% level, maybe back up into some of this price action, some of this congestion here, but I think that'll be met with some selling pressure here. And also depending upon what kind of news comes out of Washington early part of this week is really going to be kind of a fundamental driver on the markets. Looking at the monthly chart doesn't really tell us a whole lot new. We are back in the buy zone on the daily chart. But until we get a fairly bullish candle there, I can't really make a determination on that till the close of the markets on Monday. So we are right up against that support level there, right around a little above 1056, probably up around that 1050, 1059, 1060 level. So that's what things are looking like on the Russell contract. Still looking for a little deeper pullback based on the higher time frames here on the weekly contract. And if we do get running here on the pullback on the weekly chart, really be interested to see what that candle looks like at the close of tomorrow. If we can get another bearish candle, or at least a bearish candle here on for September, then that might give us a little more inkling into whether this is going to be a deeper pullback on the monthly chart. But overall, things, again, very cautious even on the small cap stocks. And then we'll just take a look at one foreign currency pairing here, looking at the Aussie dollar. As you can see on the monthly chart, had a major breakdown off of this 106 level, that flat level setting up. And since then, it's been just a straight run down for the Aussie dollar. And the closest level of support that's now become resistance has been this 95.5 level. It's got a run back up there and then got this nice rejection candle on the weekly chart off of that level. and then it looks like we're just getting the break of the low of that rejection candle, basically two rejection candles. And so we're right there in the sell zone on the weekly chart, in and around that 10-20 period moving average. And so if we can get a breakdown off of that, moving to the downside, then I'd more or less anticipate something down around this 90 level, potentially something even back down toward a retest of this 88 level. So higher level time frame, there's a lot of risk there, being that this is such a higher time frame candle, a weekly candle. So we'd probably have to go down to some of the lower time frames to actually find our trade setup. And as you go down to the lower time frames, you can see that all these charts are then rolled over, and then we can start to see where some of these pullbacks are starting. It looks like on the 60-minute, there's some nice candles there that are setting up right in and around that sell zone. We have some setting in right here as well. We've got the break of the low of those candles, and we don't necessarily have any divergence happening as of yet. So things are still converging on the indicators, which looks pretty good to continue the short downtrend. So we can be looking for some trend flow setups here amidst these lower time frames that will match up with some agreement on what we're seeing on the higher time frame weekly chart. So it's got a pretty decent setup there on the Aussie dollar for the week. And that's the outlook for the markets this week. I'd like to thank you all for watching the Open Equine market commentary for the week of September 30th. And we look forward to speaking to you next week on the Market Update.